Hi everyone, fraud session. Thank you so much for joining. Hopefully it will be simple, and one of the things which is very critical is the engagement. The only thing is constant in the financial industry is risk. The only thing is constant in risk is fraud. Fraud will always be here. That's why we're covering fraud. And I would like to make it a little bit more interactive, just to show you what are the emerging trends that we're seeing in the industry right now, how we potentially can leverage some of those capabilities that we build either in-house or available in the industry in general to address some of those concerns. Please feel free to stop me at any point. Would like to make this as more engagement as possible. This is me, responsible for payments risk in Galileo, the risk capabilities, the risk transactional fraud, and some of the operational components as well. So what are we going to cover today? A lot of interesting topics, but I would like to show you the landscape first, demonstrate how exactly the fraud evolved over the last couple of years, what we should be expecting in the next years to come, primarily around the new capabilities that are evolving in the market. FedNow, there's the same-day ACH that always create obviously the risk patterns, but at the same time, people are not aware what are the capabilities that they can leverage to build, to address some of those concerns. So we'll be talking about the money movement components, the bot attacks, data breaches, which again, if you think about the data breaches, the moment the information, the PII is breached, then it potentially will evolve into the money movement concern, into the bot attacks, and so on and so forth. So would like to cover all of those and show you at the end how exactly we are thinking to build our platform, our strategy, to better incorporate any of those controls within Galileo. You've probably seen, or at least you have heard, what are the fraud losses and how they're emerging over the last couple of years. It's interesting enough to look at just at one of the charts saying that the cost of fraud over the last couple of years increasingly got to the point where we are spending 4.25 actually, well, based on the recent research, it's actually $4.5 for every loss of every fraudulent activity. It's enormous number, which includes obviously the operational cost, the cost of the vendors, the cost of technology, the overhead, disputes, and so on and so forth. Now, is there something that has to be done about those trends? Absolutely. One of the other actually scary components of the fraud in general is if you're looking at the amount of spend that the industry is going to generate to leverage fraud capabilities over the next 10 years, we are looking at approximately 10x increase compared to the last year. We are reaching $250 million by 2023. Now, the goal for the service providers, the fraud providers, it's not to squeeze funds from the clients. The cost is primarily to mitigate any of the fraud concerns. Now, the moment you have the cost, which means the cost of the fraud will also keep increasing. Therefore, the new capabilities are absolutely necessary to mitigate any of those concerns. Transactional money movement, ATOs, and first party, as we all know it, and so on and so forth. Continuous growth in fraud in general. Like if you look just a couple of years back, 10% growth year over year, pre and post pandemic. It is amazing growth in technology that we thought at some point will be mitigated by EMV, the chips, or the controls on the ACHs, which everyone would like to leverage, the EWS, the GAIAC, and so on. But apparently, as we're seeing, the bad actors find new ways to evolve, find new ways to find new constraints with our controls. FedNow, a component that nobody knows at the moment how we'll be able to control going forward. Fraud cases. Those are just the four major ones that the industry experiences at the moment. So we have the first-party fraud. We all know that as first-party abusers. Me as an individual, I have my client remorse. I would like to dispute transactions. Unfortunately, the cost of this is there's no direct way to determine whether I'm an abuser, as well as just the cost of those transactions tend to be significantly higher from the regular compromised cards. So one of the big problems within the industry. Family fraud, which in some cases can be attributed to the first-party fraud as well. Like, I know some of my family members making transactions. I actually would dispute them just not to put my kid in, or my family member in danger. Account takeover. A major problem as well in general that exists where all our information, starting with our credit card numbers, the BIN numbers, our profiles, all available on the market for grabs. So everyone can potentially get our information, start creating some kind of bot attacks to spoof our accounts. Bot attacks, and we'll touch on this in a bit, is one of those capabilities that significantly evolved over the last couple of years and possess a tremendous threat right now to the entire financial industry. It covers transactional fraud on the cards, on the money movement, and so on and so forth. E-commerce fraud, as we all know, the traditional transactional fraud, a problem everywhere. It starts with card skimming, with irregular card skimming. You would be surprised to know that even now, as the industry moves towards EMV, is the industry moves towards a cards without the MAC stripe, which will be the new norm in a couple of years. The capabilities of skimming the cards, leveraging them in other instances of e-commerce still exist. The question is how we can potentially address those things. And there's a lot of capabilities, a lot of things that we can do through either partnerships, create some of the capabilities in-house, continuous monitoring, operational risk, operational fraud, and so on. And obviously the money movement, which you will be quite surprised to see in the next couple of charts that the money movement possesses the biggest threat right now to the industry when we're talking about the funds in, the funds out, returns, and so on. Interesting stats. As of last year, 65% of all the companies that has any kind of transactional activity, money movement activity, were subject to some kind of a fraudulent, to the fraud attacks, or at least fraud attempts. Over the last couple of years, we do see a slight decrease. This is phenomenal because we do have new capabilities, not technologies. But at the same time, 65% of all the industry still suffers from this activity. The most surprising part is if you're looking at all the money, all the financials that are being schemed, more than 70% of all the funds cannot be recouped. Only approximately 30% of the funds can be fully recovered. Now, those, if you have to attribute those to some of them, those are the natural rules where we can recoup some of the funds through the push by the natural regulations. But if you look at all the others, the transactional components, the Fed Now, which is a real-time payment, will not be available. Cash App, PayPal's, and other P2Ps of the universe, the funds are gone. So the question is how we potentially can think of the money movement controls, mitigants, to basically make the entire industry better. The evolving trends in the industry of the Fed Now is going to possess another huge threat to the entire ecosystem, as more and more funds will be trying to move away from the ACH towards Fed Now for bill payment or any other components.
Do you know how much of that money movement fraud is Zelle? I think I read somewhere that a large number of frauds propagated to Zelle transactions.
Zelle has enormous exposure to fraud and risk in general. Looking at the numbers, so the fact that the Zelle is a real-time payment with the funds not being able to recoup, it all falls into 44% category where none of the funds can be recovered, unfortunately. Now, looking at Zelle in general as a trend, $55 billion are transferred through Zelle every single month. Just if you look at 10 bips of those funds being fraudulent, we're looking at $500 million without any recoveries, right? Now, if you add to this the component of the overhead, the operational component that is needed, so you lost $500 million, you added another $500 million in just trying to address any of those fraud concerns, right? So it's not just the fraud losses, but it's also the additional parts that are coming right after that. By the way, Zelle is not the only one. Cash App, we all heard about the issues with Cash App a couple of months back. PayPal, very similar. If you look at MetaPay, It's a very new emerging trend that we're seeing right now, and you will absolutely see why the moment we get to the part of exposure. MetaPay has all the information about individuals within the Meta ecosystem. Everyone is trying to pay for the gaming, for the other parts. Now it became also a channel for real-time payment money movement. So the amount of exposure on this one is similar or actually outgrowing what we are seeing right now within the Cash App universe. And you'll see the Cash App, PayPal, Venmo, Zelle, all of those are very easily leveraged for any kind of money movement. It's as simple as putting my account number and routing number to know where the funds are going. Now, if you're looking more broadly, the bot attacks that are available right now in the market for grabs, everybody can actually build their own bot. I can start generating account numbers, trying to siphon the funds from the account, right? Like we all know the routing numbers. It's actually public information. The only non-public information is the account. So if we created this traditional velocity control around accounts, that possesses a huge threat. So as I was mentioning, if you look just at the bank transfers and the payments, by the way, this only represents 19% of submitted information around fraud. But the bank transfers and the payments, only with the 20% information, already possesses $1.5 billion of fraud exposure over the last year. You would expect that the credit card would be the biggest component, and it is in terms of submitting the claims, submitting the disputes and so on, which is expected. The most of transactions that individuals making within the United States are through the cards, but the exposure is significantly lower. So 20%, we're looking at a couple of $1 billion overall, but on the money component, it becomes a little bit more critical. Every single transaction has thousands of dollars potentially, versus up to $30, which is the average on debit or credit card nowadays. And again, you can see that Cash App, Venmo, PayPal, Zelle, they all possess pretty much the same threat that we're seeing within the industry overall. How we potentially can control for this thing? There's no secret sauce, unfortunately. It's all about what is our risk appetite, how we can start addressing those things through our existing capabilities or enhance our capabilities, enhance our capabilities with some of the additional controls. Abiding by the natural regulations becomes almost a paramount. Like it's a mandatory thing, obviously, for all of us to have. But then at the same time, they also have some of the very interesting suggestions against the payment holds, how to release the payments, how to monitor for some of the payment originations and payment receivables and so on. KYC, the entire scope of the money movement fraud starts with onboarding the right individuals. And this is the problem that exists in the industry worldwide. Synthetic IDs, as I mentioned before, our PII is up for grabs. So we can onboard probably the right max with the wrong address, with the wrong social, and so on, right? So all of those components have to be vetted before we enable the clients to have a money movement, proper money movement control. Odd holds, and I mentioned this a little bit before, validating that the payment is valid through other components, such as early warning. I know we all heard about early warning, we all heard about GAIAC, how we can better leverage some of those capabilities to make the transfer much better. Step-up authentication. If I'm always transferring $5 from my account on the money movement, suddenly I have a transfer of more than $100,000, potentially it's possible in the B2B space, it's more relevant to the B2B space. We have to be very cognizant of this capability and generate some kind of friction on the client side, such as MFA, client authentication, client outbound call with some of the clients who potentially don't have the capabilities of client outreach. So all of those capabilities become critical. But at the same time, think of a broader capability around the platform and the platform that you are going to leverage. A continuous monitoring of all of those activities, along with the additional services, the KYC service, the KYB service, and so on. The continuous OFAC screening becomes a paramount. So if you can embed and ingest as much information as possible into a single platform, that becomes a much better solution for any kind of fraud mitigation. just velocity on its own will not solve the problem, unfortunately, and we all know that. We've seen many use cases. Sorry, before I get there, any questions about the money movement? Perfect. Transactional fraud. We all see transactional fraud. We all heard about transactional fraud. The cards, the pain points that we're seeing from the clients, where the client is actually calling in, complaining that my card was scammed. It's not the transaction that I made. One of the major misconceptions in the industry right now is we are coming to solve for fraud, which is not necessarily true. We are coming to solve for client experience. The fact that the customer picked up the phone, called us, complained, and we stayed on the phone for the entire hour to entertain the client, first, we increase our OPEX. The second one, client is not going to use the card as top of the wallet anymore. So it's gone. So we're trying to cater for customer experience. Second component of it is we're trying to cater for fraud controls, right? So again, the OPEX and the other parts. There are many challenges with transactional fraud. A lot of them are around the capabilities, a lot of them around what are we potentially can implement within our solution. Complex and expensive hardware. If you went right now and implemented a solution separately from your either payment processor or your network, you potentially up for grabs of multi-million-dollar journey for multiple years. While at the same time, if you look a little bit more broadly into what your payment service provider can offer, what your network has to offer, they're always trying to cater certain solutions tailored for the clients. Like if you're in a startup mode, and we have startup representatives here, we might potentially consider as a very simplistic solution that will evolve over time. If it's a major organization, we have to consider the fact that the nature of the transactions will shift. The amount of the transactions will change. So we have to be able to tailor our solution for those changes as well. So there's a trade-off. As one company grows, the other one remains somewhat stagnant or has a smaller or marginal growth. The capability is supposed to be able to shift. So there's no one secret sauce for all. And this is one of the major challenges right now in the industry, that all the providers are trying to provide similar solution, which is probably the wrong, not necessarily the right approach for either major financial institutions or smaller financial institutions. The continuous need for investment. We invested in the fraud capabilities. It is great. Now we have the platform. Who is going to actually tailor the solution? Who is going to build the solution? The engineering power behind it, the SMEs that are needed to build those solutions within the platform becomes also another OPEX that everyone has to think about. So broadly speaking, it's the investment in the tool, investment in the technology, investment in the SMEs that becomes so much complicated, where the small companies potentially will run out of funds. The big companies, they don't see this as the main focus right now unless they have a $1 million loss on a single event. Speaking from prior experiences, I can tell you that looking at companies like Goldman Sachs, one single event worth of $5 million versus $5 million lost over 5,000 transactions on the card. Like, the magnitudes and the transactional aspects of fraud become so much different. So the catering for the information, for the solutions becomes a paramount. How we can prevent it? Obviously, stay ahead of the industry trends. One of the things is a continuous research, what we're observing within the industry. Knowledge sharing. One of the paramounts of fraud and risk is having some kind of consortium information. Without consortium, we're only blind in seeing whatever we have within our portfolio. Think of Galileo, think of MasterCard, think of Visa. As long as we can share the information, they can share the information with us. We can share the information with them. Obviously, the solution, the DI score, the VAA score, many other capabilities become so much better. Enriching the data. The customer data, as I mentioned before, the velocity itself, for example, will not solve for the problems. But if we can create the single client journey from the client onboarding all the way to the password changes, the login changes, the shift from where I'm attempting to log in into my portfolio, mapping those against the transactional part, that becomes so much more richer experience from fraud perspective, that We are seeing, with some of the examples that we have right now, we are seeing a reduction, immediate reduction of almost 30% with some of our clients, just by ingesting the data of the client onboarding, the KYC and the CIP parts. AI, the biggest thing right now that everybody speaks, right? Great buzzword. Now, it's important to know how to use AI. We can do a lot of harm, we can do a lot of damage, we can do a lot of good things. So our models, potentially, as we embed the models, the Visa score model, we continuously have to ask the Visa or MasterCard to provide us with new information. As we build our own models, a retraining of model periodically, every 6 months, every 1 year, becomes absolutely a necessity just so we can adjust to the newer trends. Think of whatever happened during the pandemic time. The entire payment shifted towards the e-commerce, while the models were still tailored for the brick and mortar stores. So you can see enormous differences between the scores coming from the e-commerce compared to the 2 years that you've seen before. Now, again, MasterCard realized it a little bit somewhat later, Visa a little bit quicker, so they were able to tailor it. But still, we were seeing percentage points. We're not talking about bips. We've seen percentage points differences between the fraud associated with lower buckets and the higher buckets. So continuous training of the model, creating the models, not just focusing on one model, but augmenting the models with additional information becomes absolutely necessary. Our entire universe is digital right now, fingerprinting. And I'm not talking about our regular fingerprint, the fingerprint of our device as we're logging into our apps, as we're trying to log into our banking accounts. Having this information as part of the input into our models, into our controls, into our platforms becomes also a necessity to have successful controls, to have successful platforms. How I'm thinking about fraud, how I'm thinking about risk, and me as Galileo representative here. It's one ecosystem that potentially should accommodate multiple solutions. We should be looking at the merchant insights. We should be looking at the merchant fraud. We should be looking at the money movement. We should be looking at one single solution that will potentially expose you to a case management solution that will allow you to ingest those additional data points and data components that we just discussed, such as KYC, KYB components, just so we can better understand what exactly the threat, how we can expose all of this information to our clients, how we can enable our operational team to be able to be more efficient in the disputes, in reporting, reconciliations, and so on. The reporting component of this entire journey is extremely critical. If we are blind to the data, we will not be able to take the necessary actions. We will not be able to drive the necessary decisions. So having the right data streams, providing the necessary reports, dashboards, and so on, becomes also a critical component of the entire platform. So looking broadly of Galileo as a provider of the solution, we are thinking of one single platform with multiple data points that will include, again, the money movement, access to potentially even EWS, right? Again, it becomes a very critical component for any kind of money controls that we're going to have. Interesting enough, I don't know if you know that, but FedNow is going to leverage, in most cases, at least for the next couple of years, the same routing numbers and account numbers as a traditional ACHs. Therefore, if we are looking at ACH controls, we can potentially use the same framework for FedNow. With wires, it's a little bit different. It's a completely different topic, and we can cover this in some other time. Questions? Great. Account takeover. Very unfortunate use case that we unfortunately heard from many instances in the industry. Very simple to perform, and I want to say that pretty much every financial institution right now, starting from a fintechs, the moment they launch their programs, all the way to mature financial institutions, JPM, Goldman, Bank of America, and so on, suffer from this problem. It's as easy as buying our information on dark web, generating some kind of a bot to be able to either find the right combination, the name on the password, or some other activity. The moment it happens, it opens room for so many things: replacing the card, changing the shipping address, changing my information, who is the co-signer on my account, if it's a loan account, and so on and so forth. So it's not just, account takeover not necessarily happens just within the realm of cards. It happens within the entire payment ecosystem. Loans, banking, money movement, transactions, business email compromises, and so on and so forth. And those are the components that you can see that potentially can be engaged as part of the account takeover, siphoning funds, which is the immediate need for, I want to say, small type of fraudsters. If you're looking a little bit more broadly with major financial institutions, the business email compromises become such a much bigger problem, just because with a single transaction we can siphon up to $5 million. This is the statement that I added myself, but it is nearly impossible to detect account takeover until we're either being told, until it's occurred, until we actually have the necessary due diligence. Unfortunately, we will always be running behind the bad actors, right? So the faster we can address the account takeover component, the better we are, both from the dispute standpoint on the cards, all the way to siphoning funds through other means and other channels. How we can prevent account takeover? There's a couple of approaches. There's no, like I said, there's no silver bullet. The main one is we always have to protect the client, we always have to protect the entity, and we always have to take a little bit more, what is the right word? The approach of looking at multiple channels. We should not be focusing just on the cards. If it's a specific individual, we should be looking at, were there any changes on the individual PII that we potentially should be looking at? If it's the account or the account fingerprinting, did any change happen on the account? IP changes, login changes over the period of time. Account linking, which is obviously happens from the moment you have the ATO, and so on. And the ability to be able dynamic with how we are coming to address the fraud. We continuously have to evolve. We continuously have to change what exactly we are doing with our controls. We have to be able to address the change of the IP addresses by creating this generate this necessary friction. The MFAs, notifying the client of any potential changes. All the way to an extent, unfortunately, to an extent of even blocking the account from being able to transact until the client will be able to authenticate himself or herself through a face-to-face communication, over phone communication, or have a more robust KBA. It's a problem that there's unfortunately no solution that exists right now in the industry, but we still have to be able to take more proactive approach with controlling for any type of fraudulent activity, risky activity, any kind of changes that we are seeing on our account. I mentioned the data breaches before. I mentioned MetaPay. So it's not a surprise if you look at Facebook in 2021, multi-million exposure of data PII elements that were leaked. Now, what a surprise, a couple of years later, we start seeing all of those PIIs are being monetized, accounts being created, fake accounts are being created on multiple platforms. Without naming the names of the platforms, but we are seeing that a major shift that is happening from the Cash App towards MetaPay just because of the simplicity to open this account and how cheap this information became over the last couple of years. If initially we were looking at $5 approximately per PII, now we are looking at $5 for 100 records. And most of those 100 records are actually valid. Excuse me. So the shift is just enormous. The Cash App exposure, the Uber exposure, the moment those exposures are happening, all of our information is up for grabs. The data breach leads to potentially account takeover. It leads to potential bot attacks. Which later on leads to the money movement fraud, transactional fraud, changing the cards, issuing new cards, and spending on those cards. Look at the cost of the data breach. One of the things that we always have to be cautious about is if data breach happens, first we have to check it with our partnering banks, with any kind of bank. Is there a proper control available around the data breach? Is there proper monitoring? if there is a monitoring, how quickly, how swiftly we can be notified about some of those activities. The cost of breach over the last year, if you can see, it's $165 per record. So it is the cost of the fraud, it's cost to mitigate, it's cost to have even the client communication, processing, the legal cost, and so on and so forth, right? So it almost becomes a paramount for us to look at data breaches as our foundational components, how some of the fraudulent activity can potentially start. $165 is for the overall. Look at the customer PII. The cost of customer PII is almost $200. It's an enormous number. The cost of being able to address it against the bureaus, the cost of being able to mitigate it against the client, all the client concerns, the legal concerns that the client might raise, reach almost $200, right? So again, the foundation of the entire fraudulent program should be the initial data breaches. And I mentioned this before on the prior slide, but customer PII always becomes the paramount of what the bad actors are looking for and what our clients are suffering the most. Customer PII is being attributed to 52% of all the information that is being stolen. So any kind of information you can think of, phone number, name, everything that potentially can be used and leveraged to create separate accounts can be attributed to the PII. And we have to be very cautious whenever we are controlling for them in our either the storage or how we're monitoring for any potential data breaches. Tools that are available to monitor such activity. Iovation, you probably heard about Iovation. You probably heard about threat metrics and many other tools that will allow you to profile the activity at the time of the login, at the time of the PIIs that are being used for the logins and so on and so forth, as well as the transactional component are very critical to have some kind of baseline controls against data breaches and client authentications. If I have an account with bank ABC as an example, and I'm opening another account, obviously the bank has the ability to link the information. Now, if one of my bank accounts is attributed with New York State, another bank is attributed with California State, great. This is the first flag that we should be looking at as our accounts are being compromised, as our accounts are not in the right state. So one of the major concerns there. Selling the data, like I said, $5 for 100 records. I mean, it becomes almost a crime not to use it for crimes, right? So it is just so cheap that the bad actors, obviously, they know how to leverage it, and we have to be much more proactive around.
I just want to talk about this because I have an anecdote. It's almost impossible to prevent data breaches. I'll give you an example. I got a letter once from some company that I've never heard the name. So they sent me a letter saying that my data had been compromised. It was my name, my social security number, and my bank account. And I was really upset because they sent that letter like a year and a half after the data breach.
Yep.
But I was more, so I called them up and I was really upset, good conversation with them. But I never knew the name of the company, and I was like, I've never done any business with you. How did you guys have my data? And then I found out that it was one of my previous employers who had actually contracted with a tax firm in California who was creating the W-2s. And that tax firm had contracted with another third party to store their data. So it was, it was just like, and then I called my HR at the previous company. They had no clue. Obviously, I sent them an email, they didn't respond because big liability issue. Next thing we know, there's letters sent out to all ex-employees. But, at that point, I'm thinking there's no way I can control this stuff, right? Because it's being spread all over.
Think of the hassle, and this goes back to the cost of the data breach. The fact that you had to be several hours over the phone, they had to issue a legal letter to you, and so on and so forth, becomes just a huge hassle to everyone, right? Now, another problem that exists in general in the industry is the fact that when the data is being a lot of the data is being sold, right? Data aggregators buy tons of information. If they're being compromised, think of the ability, think of how much more information is being out there for grabs. On the previous slide, you probably saw like password. Unfortunately, they had an incident a couple of months back that they declared. Not a big exposure, 800,000 accounts, 800 individuals that were exposed. Now, if you think of the data aggregators that buy information from Pathward, from Bank or Bank of America, and so on and so forth, you have hundreds of millions of accounts, PIIs, information that is being sold. Now, Hargi, to your point, it gets to the level where you're getting legal letters from entities you've never heard about, but at the same time, you're not aware at what stage your information potentially was breached, was compromised, such that you can start mitigating it all the way upstream, right? You're only focused on this last one instance. So it becomes a major, major problem in the industry right now. And again, as I said, it's one of the foundational blocks for have a decent risk program in general, not just fraud, risk program in general. Bot attacks. Think of the use case where the data is being breached. Everybody knows who is Max. Everybody knows my first name, my last name. Well, not so much of a traditional name, but if you have Jack Smith, for example, right? The chances of having the same Jack Smith in the United States probably is somewhat higher than Maxim. Now, the only thing is left is, can I generate a bot to potentially create a password to be associated with this Jack Smith on Bank of America, JPM, and so on and so forth, right? So creating a bot, generating a bot, the cost of generating one is approximately $15. It's a very cheap technology that allows you to create a lot of damage, a lot of noise. So creating one, associating one with one of the accounts, and start running it continuously creates a much bigger threat just because of the data breaches. So it's one of those things where we can have e-commerce fraud, application fraud, like the fact that I can breach the account, I can change information, but then I can apply for additional accounts. I can open lending accounts. I can tell you actually one interesting scenario in my prior lives. We all heard about micro deposits. We all know what micro deposits. The way it works, I'm extending someone 6 cents, 4 cents just to validate what is the amount. The moment I'm validating the amount, in most cases, the banks are not clawing back those 4 cents just because the cost of submitting a NACHA file actually is 5, so it's much more expensive. Now, think of an example where I'm creating 100,000 accounts with micro deposits that I'm not touching. The next thing I'm doing is I'm siphoning those 100,000 deposits into a separate fund. So I have 100,000 accounts with 5 cents siphoned somewhere else. I just did $5,000 without a sweat. Right now, and this is just in one use case. Think of us being able to do this across multiple institutions. Within a week, you're losing almost close to $120,000. Now, this is a real case that we observed as part of our fraud controls, fraud mitigations, where within a very short period of time, bad actors were able to siphon more than $100,000 just because of micro deposits, just because they were able to generate the bots, just because they applied for loan services, they applied for checking accounts, savings accounts, cards, and so on and so forth. So instead of doing a traditional authentication through a phone, MFA, they went through a micro deposit route. They became richer with $100,000. So account takeover, another problem that we are seeing. So there's a lot of nuances when it comes to bot attacks, when it comes to leveraging the bot attack post our ability to purchase data which is up for grabs. Questions? Great. Compromise activity. There's a couple of things that, couple of models that we can work against compromise activities. Common point of compromise is one of the models that is widely available right now in the market. Only, well, I would say widely available within several companies only. SAS is one of the providers. IBM is the other provider. The nuance with that is the complexity of the computation, but also as I mentioned before, you need an SME to be able to decipher the information, to be able to ingest the right information into the model, and later on even decipher what is the outcome of the model. So having some kind of a compromise activity is absolutely critical for any kind of account the moment a certain portfolio reach critical stages. What are we looking at in Galileo in general? We're looking at client appeal, benefits, one single platform that will potentially embed all the solutions that we just discussed. Solution for KYC, to have a one single client journey that will potentially enable us to look at the KYC, transactions, adding the funds, disbursing the funds, and so on in one single platform. Fully automated solution. The more people we have in the tool, sometimes it might be working for our benefit, but what we realized is some of the automated solutions and the ability to have them dynamic benefit to the clients much more. So some of those use cases we'll be able to see with some of our clients in the very near future. All-in-one service. Think of it as a single API that comes to address pretty much everything. You don't have to worry about integrating with third-party provider, fourth-party provider, calling EWS, calling Twilio for client notifications, and so forth. And obviously the client appeal, as I said, it's a zero effort. We're already getting all the information from a lot of our clients. We have the transactional data, we have the money movement data. Again, it almost becomes a crime not to use one single API for all of it. For clients who are not Galileo clients as well, it's also the ability to, we have the ability to expose some of those capabilities to them as well. Very recent announcement that we made with Galileo. So again, some of that becomes very appealing to a lot of our clients, a lot of our prospects. What are we trying to do? What is our goal? Foundation will be our analytics. We have to have the right analytics. We have to have the right reporting and the infrastructure to provide any kind of risk-related activities, analytics. Compliance risk management becomes a paramount. Do we have the ability to submit SARs if needed? There's a major need for this in the industry, and we're trying to accommodate for this as well. Money movement risk and the transactional risk component. So going forward, it is something that we're trying to embed into one single client journey. The money movement, the transactional, the KYC, and obviously the client communication. All of those are somewhat tied together. The moment there is a disbursement of funds, I would like to notify my client. The moment there is a fraudulent activity, I would like to validate it with my client. A lot of those activities can be addressed by as simple as, hey, Max, were you the one to make the transaction? Yay or nay? Based on the feedback, we can know how to proceed. But again, I just want to highlight that all of this thing can only be possible if we have the right analytical framework and analytical structure, analytical reporting to be able to run all of those activities. With that being said, questions?
How do we learn about this Galileo through the SEC platform? Like, what is it exactly? Like, what are the products and the pieces that you guys are?
Absolutely. I can have a separate session with you and show you exactly what are the components on the FinSec, what comes as part of the data elements, the money movement, and so whatever we just discussed, and as well as how you can integrate into a single solution. If you're, for example, if you're a Galileo client, how you can integrate into a single solution through one single API. If you're not a Galileo client, what are additional things we potentially might partner with you to ingest information from your side to make your solution better. So yeah, I'm more than happy to have this as a separate session with you. Absolutely.
Max, not a question, but I know some of the numbers that you shared were a little hard to see through there. So I just want to make sure everyone knows where to share that information for the registrants. So you'll get that data.
Yeah. My apologies. The lighting could have been a little bit better, or the reflection from the screen. But one of the, like I said, one of the constant things that we're observing is the fraud and the risk is on the rise. It's continuously on the rise, and the fact that there is going to be a tenfold investment in the technology around the risk and around the fraud actually should be very concerning, just because it's an indicator that the fraud is not actually going to be lower. The fraud is going to increase. With the increase in fraud, there is a obviously need for a much better capabilities, much better technology, much proactive approach around the mitigations.
I think there was, some of the responsibilities also with the banks, because in the past they were so eager to sell products. Remember the whole Wells Fargo where they started getting all these false accounts
controls?
And it's interesting that you mentioned the Wells Fargo use case because, well, first you would expect from a financial institution not to be in this kind of practice. That's one. But on the same side, all the major financial institutions trying to link their bank activity together. So if I have a traditional bank account with Wells Fargo, I would expect that under the same PII, under the same social security and the name, I would expect to see all of those linked together. So it evolved actually a little bit beyond a traditional scheme of opening a regular account. It is creating some kind of a great wall between what is the genuine account versus what is the fake account, right? Not having the ability to see those together. Like we all have bank accounts with major banks, right? Like if you open another account, you most likely will see it under the same login and credentials. So it went way beyond this activity. Not surprising that we're issued a regulatory complaints, right? So the controls will be more strict, but it's not just the data exposure, it's also the engineering, it's the operational scheme that we're involved in this entire scheme, so which makes it so much more complicated. So, absolutely.
Do you have any experience with dark web monitoring?
We do. We don't have this capability right now with Galileo. It's something that we are planning as part of our roadmap. We do have partnerships that have the ability to monitor dark webs, which is great. The question remains is, what are the data elements we are going to monitor, Leslie? So,
And how important do you see that?
it's interesting. It's a nuanced question. Here's why. Even within the dark web, there's a segregation between the subprime clientele, the regular, and the upscale. So for subprime, most likely there is very little information that will be shared just because it's not so much lucrative, unfortunately, right? Most of the information that you will see is around prime clients. But by the way, data breaches covers all of it. So it's critical to monitor, but we also have to be aware of what exactly we are monitoring from the client perspective. Are we monitoring the PII information? Are we monitoring the accounts that are being out for grabs? Are we monitoring the card numbers? Unfortunately, the card numbers are also there available, right? The only thing that, as we observed, not available potentially might be the CVV, right? So what exactly we are monitoring is at the PAN 16, the expiration date, and now we have to be very cautious about the CVV part that we can put on a continuous monitoring within our platform, or it is the overall experience of the customer. Like Max, like first name, last name, social, and so on. But I can provide you with some more details, what we can do around this front. We do have great partners to work on this with us.